Hi everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Monday the 11th of October. Now, market sentiment is still a little bit mixed, and it has been for recent sessions actually, but the weaker than expected non-farm payrolls report on Friday has just left traders in a bit of a quandary, because certainly it doesn't really seem as though that the Federal Reserve is going to be pushed off course on its tapering path. Certainly the comments of Mary Daly seem to suggest that. But the equity markets moves have been slightly mixed actually since that payrolls report, and again slightly lower today, because what you do still have these rising inflation expectations and rising fears that could have through market moves, energy prices still pushing higher, and that is still affecting through sentiment. I think the dollar today is a little bit mixed, and was mixed off the back of that payrolls report. The knee-jerk reaction was quite quickly unwound, but slightly moving to the downside across most major currencies on the dollar today. But with Columbus Day being in the States, then there may be a little bit of mixed moves and reduced liquidity, and that could induce a little bit of odd trading. But essentially, we're still seeing that the trend of dollar strength is holding, but it's starting to waver a little bit. But it'll be interesting to see how equity markets continue to react to these raising inflation expectations, and bond yields moving higher should be a little bit negative perhaps. So with regards to data points today, there isn't anything really to keep us going. There's a Fed member, Charles Evans, has a speech today later on, but essentially I think markets will be fairly well set to as the trends that they are holding at the moment. So the charts I'm looking out for today, we're looking at cable, which has risen on hawkish comments from the Bank of England. We're looking at the gold price, which spiked around a bit on Friday, but essentially is still holding in a range, and also looking out for the dollar-yen chart as well. Big move to the upside on those rising yields. So let's have a look. And onto the INFINOX MT5 platform, starting off with sterling dollar. We can see that sterling dollar has moved higher in this early part of the session today. It's been chopping around actually. The dollar has been broadly stronger, but the sterling prices have also been holding up, and now starting to push higher on hawkish comments from the Bank of England member Michael Saunders over the weekend. He is one of the chief hawks of the voting committee though, but still cable moving higher on a stronger sterling. And we're starting to see a little bit of traction on that RSI, sort of moving towards the 50 area, and it certainly seems as though the market is sort of breaking clear of the 36 area. Certainly the 35 to 36 area is now being left behind, but also above 36.65, and that now opens this next band of resistance, the 37.30 up towards 38 figure area. And certainly on the 4-hour chart, you can still see this improvement in momentum starting to now take hold, the breakout on a near-term basis. So you're looking at probably on near-term trades buying into the weakness. There's a nice breakout band of support around the 36.35 to 36.60. Nice area there. On long positions on the near term, I wouldn't really want to see it below 35.80, but it looks as though the market is now breaking clear and opens up for the further recovery within this downtrend, I might add, towards that 37.30 area. So onto dollar yen. This one's a big mover on treasury yields. Treasury yields spiking higher in the last session or so, and again dollar yen moving higher, breaking out to multi-year highs. This is the highest it's now been since December 2018 now, so breaking out, continuing higher. You'd be looking, I think this is a key move on dollar yen that would suggest, I think, still going higher. You've got some key breakout support between the 1085 to 1160 area, but 1160 now to 1208, 1210, certainly an initial band of support there on this chart, and you can see here on the 4-hour chart breaking out on near-term basis and retreating into that uses support around 1165. So good support around 12 figure to 1160, and certainly looks positive for further gains. Now, if you go onto the weekly chart and open it out, you can see that really 1440 is a possibility on the long-term range charts. And finally on gold, we had an initial move higher on Friday. Inflation expectations soaring, dollar under pressure. That tends to mean that gold moves higher, but initially that move has been retraced, and you can see that it didn't take long either, and it's just now settling back into this support around 1750 to 1760. Again, this is a very tight trading range area. Previously, in the course of the past week, all these buys have started to come in around that 1750 area, so we're still sort of in that game there, but I must add that 1780 is certainly still a basis of resistance. You can see that through the daily chart here, and sort of moving out one more level. You can still see that it doesn't look great, does it? And it still looks that if you start to see the market trading below 1750, you have to then start to factor in 1720 again. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Wednesday where we'll be looking at that important US inflation data. So I'll leave you with the INFINOX support and resistance table, and I will speak to you then. Thank you very much.